Welcome to the Knakal News Network. Knakal News Network is brought to you by Massey Knakal Realty Services, New York's #1 building sales firm.
Hi, I'm Elisa Berlin, Director of Sales at Massey Knakal Realty Services. Today, I'm here with Bob Knakal, Chairman of Massey Knakal. Welcome to the Knakal News Network. Some of our clients think we may be in a bubble because they're getting prices for their properties that seem extremely high. What do you see the important factors in determining where the market is going in 2014?
We always look at supply and demand changes. I mean, the balance between those two impact what happens in the city. As you know, the supply of available properties is what dictates what the volume is going to be. So what we're seeing on the supply side is that we're seeing more and more properties coming to market because of the tremendous increase in prices that we've had. And so we expect to see increases, healthy increases in the supply of properties based upon where values have gotten. And so on the demand side, demand is excessive. And even the fact that some folks think that we are in a bubble and that values may be lower in 2 years or 3 years than they are today, that's not dissuading incredible numbers of buyers coming into the marketplace.
How are governmental policies going to impact the market in 2014?
Well, there are two different policies we need to look at, or two different types of policy. One is on the local level and one is from the federal level. On a federal level, I don't really expect a lot is going to happen this year because of the midterm elections coming up. And I think it'll be interesting to see how Mayor de Blasio and his administration implement their policies. I think a lot of people in the real estate industry were concerned that he might not be friendly towards our industry. You know, he came in with a full head of steam, having won the mayoral election by 49%, which was the third highest margin of victory in history. But unfortunately, only about 18% of registered voters in New York voted for the mayor. And if you assume that there are many people living in the city who aren't registered voters, maybe he got 10% of the vote. So a number of his policies have become very, very unpopular. I think most telling is that 55% of New Yorkers are against a tax on the wealthiest New Yorkers to fund pre-K. Now the governor has come up with a way to fund pre-K that doesn't include a tax increase. And if you look at who would be taxed, that component of the population makes up less than 1%, which means 54% of the folks who wouldn't be taxed are against that tax, which I thought was very, very interesting.
You mentioned earlier interest rates. How impactful do you feel they will be on our market?
Well, I think that's the key question for how we're going to do. I mean, you really could make a great argument that the government has kept rates low artificially to try to stimulate the housing market because if folks feel like they have a lot of equity in their house, they're more likely to go out and spend money. The commercial real estate industry has actually benefited from that, and I don't think our market would be nearly as robust as it has been if our interest rates weren't so low. But the question is, how long are they going to stay low? There is a great argument to be made that rates should be a lot higher. The Fed has been cutting back on its quantitative easing, its bond buying program. That would tend to exert upward pressure on rates. But the government has tremendous motivation to make sure rates stay low because of the massive debt we have. Our debt is up over $6 trillion over the past 6 years, yet our debt service payments are lower today than they were 6 years ago. So to the extent interest rates go up, that will have a very negative impact on the federal balance sheet. So I think the direction of interest rates will be key to how the rest of this year plays out. We believe that they'll stay in a relatively narrow band of volatility. In summary, important factors to watch in 2014 include keeping an eye on the supply-demand balance in the marketplace. We expect that supply will increase as high property values compel some owners to sell. Government policy will also be impactful on the market, but we don't expect significant changes on a federal or local level. Interest rates will play a key role in how the market performs throughout the balance of the year.
Thank you for joining us today. Tune in next week for another installment on the Knakal News Network.